Welcome to Polaris Trading Group's release video announcement on a brand new product that we've been working on over the summertime called the PTG ATA, which stands for Auto Trade Assistant version 1. And this particular release video is designed specifically for Sierra Chart users, and we're officially releasing this October 1st, 2015. So what we'd like to do here before we get to some chart examples is to give you an overview of the highlights of this brand new tool that we have. Some of the features that we have built in are position sizing algorithm, which keeps our risk uniform and under control across multiple trades. We can define our risk either by percentage of account size, which many traders use, or by a specific dollar amount. And we can go one step further and define how we want to define our stop, either by using a bars back method or ticks from entry. Now, one of the features that we did add per request of many of our members in our PTG membership is to put in an auto break-even feature. And so essentially what that means is on a multiple contract position, such as 2 or more, once price reaches the risk-free level, which is the 1 hour value, the stop order is moved to the entry price, which is the auto break-even. So mathematically at that point, the balance of the position is protected. The targets that we have built in are based upon unit risk units, and as it's listed here, 1, 2R, 3R, and 4R basically are the risk-free level, 1 hour value, target 1, 2, and 3. And the ability to switch between dynamic standard mode and dynamic turbo mode setup. So on our premiums and discounts, this is designed for, there's a standard mode and a turbo mode, and we can simply switch between those on the fly. Very easy to do. The user has full control whether they want to enable the tool to turn it on or disable it, turning it off under the appropriate conditions. So if we have a directional move underway, this simplifies the decision process for the trader. Instead of this trying to figure out where and when and how to enter the trade, that is all predetermined and pre-laid out for the trader in the tool. All the trader now needs to do is identify the direction in price and simply enable it properly. When if price is in a range type condition, that may be prudent for the trader to disable the ATA assistant. All right, so the user has full control over when to turn it on and when to turn it off, just like the high frequency algorithms out there. All right, those traders that work on those. Flexibility, whether you're a single contract trader or a multi-contract trader. So, if you're a single contract trader, this particular tool will be excellent for you. Using the ticks from entry method. And if you're a multiple contract trader and you want to scale out, all right, it's very effective for you as well. So those are the highlights. What I want to do here is get right to the charts and give you a couple examples on a, of course, simulated basis here. But they were real trades that we took in our trading room, and I just want to show you those to give you an idea of how it looks and what it does. So let's switch to the charts and be right back. Okay, so we're back with you now. We've set the chart example up here to show a discount. Now a discount is a pullback, a long, within the context of a developing up move. So on the top left corner here, this is what we call our status box for the PTG ATA. We have enabled it long only, so there is no counter trend trading. It will only trade in the direction that you select it. And again, in this case, long only. We have a maximum dollar risk on this example of $400. That is all user defined. And the particular trade setup that we're searching for in this particular example is called a dynamic turbo discount. Okay, so just to give you a setup of what's happening here. There was a down direction here that met a floor and some support. All right, price has since moved higher, okay, off of that low. And then what we're looking to do is we're looking to buy a pullback here, okay, in the developing direction, all right, of an up move. Okay, so a couple of features that we look for is we look for a shift in our ATR line. So right here between the yellow line, which is the bear ATR, and the bullish line, the white one. So now we have a structural shift as well as what we call a fair value zone shift. All right, so this is this shaded area here. So what's essentially is happening here is the bulls are beginning to take control. So after a move up, there's a slight pullback, and then the bulls will absorb the sellers. All right, it'll offer us an opportunity to buy into this on a pullback, and then get in with a very effective risk-reward profile. So let me begin the simulation here, so we can see how this works. Okay, as you can see, price is pulling back here. Okay, and it's going to find a level where the sellers dry up and the buyers will begin to step back in. And then at this point, you can see there that the discount is offering an opportunity. All right. At this point, this is where the auto trade assistant becomes in handy, because a trader right at this point may be deciding whether or not they should take it. Should I buy one? What should I do? And essentially hesitate many times. The ATA is going to help eliminate that in the decision process. So all what we've had to do essentially was enable it long, knowing that we wanted to buy a pullback, and then let the computer do the work for us. So in this case, the computer here bought 2 contracts at 1908.75 with a stop at 1906. And it has staged exit limit orders at the risk-free level, 1911.50 and 14.25. Now we have a couple other target levels, T2 and T3, but since we automatically position sized at 2 contracts, it is set up where it's going to exit 50% of the position at the risk-free level, and then if there's multiple contracts remaining on the trader's position, it will stage them at certain percentages, again all user defined, at the various targets. But the highest probable trade setup and exits are the risk-free level and the T1. So again, on this particular trade, we are long here at 1908.75, and we'll let the simulation run. And what we'll see next is once we make a sale at the risk-free level, the auto break-even feature, all right, kicks in, and the remaining stop order at the 1906 will be moved up to the 1908.75 entry point. So let's just give it a moment and let it do its execution here, and we'll take a closer look at what happens. All right, so again, the trader has a couple opportunities after the alert was triggered to actually get in there, whether it was manually or automatically. All right, so price is coming up here. All right, good. So we've made, let me just pause it. So we've made a sale of 50% of our position at the 1911.50s, right, per our instructions. And then now what happens here on the auto break-even, the 2 orders that were staged as a stop loss at 1908.75 now, one has been sold out at the risk-free level, R1, and then the second one has been moved to the break-even level at the 1908.75. So that is our auto break-even feature. That is optional. Most of our traders do turn it on, and they simply want to automatically manage so they don't lose any further ground on any positions. And then now they're free to manage the trade. In this particular case, we're shooting for T1, or if the trader wishes to move, their order up to higher levels to see if they can get um, higher sales, they can do that. But we'll let this run. All right, and once we exit out at T1, we'll have concluded this particular trade, and any outstanding orders are automatically canceled, which they won't be. Okay, there you go. All right, so I'm going to stop the video right here on this particular example. So again, auto executed in at 1908.75 with stage stops at 0650s, exit 1 at the risk-free, exit 2 at the target 1 level. Again, all done automatically. So prior to this trade, as we identified prices moving up, having shifted from a bearish condition to a bullish condition, at this point, whether it's at this high or starting to pull back, all the trader's decision now, all right, becomes a lot easier and says, okay, I want to enable long only for the next pullback back into at or around the fair value zone. Again, we don't know exactly where price is going to stop, but we do know that we want to enter long on that particular pullback. Now notice we didn't buy it at the low. Okay, we didn't buy it on the way down. All right, the algorithm is specifically designed to identify where the low price is, and then as the buyers are coming back in, we're buying them actually on upticks. All right, and again, the method here is very simple. We use a buy stop. Okay, so again, very simple to use. All the trader needs to do is enable the tool. Now, I'm going to show you an example on the sell side to conclude the video. So let me set that up for us, and we'll take another quick look. Okay, on this particular example now, I'm showing an example on the sell side now, the auto trade assistant, and one of the problems that traders seem to run into is when the trend is already established. Okay, the question is, they do understand that they want to enter on a pullback within the context of a developing trend or a continuation of a trend. The problem is many times is they have difficulty actually determining the actual entry point. They see it after the fact, all right, but they don't see it in real time. And again, that hesitation factor enters into the equation quite often for traders. And again, hesitation in the marketplace here can be detrimental to your P&L. All right, we don't want to be too early yet. We don't want to be, hesitating too late. So this particular example, and this is where the auto trader system will come in extremely useful to our members and users, is that we have a defined trend here, as you can see now. We have a couple premiums here that had already executed. All right, so this particular premium up here at 59.75 had executed. Now this particular premium down here at 55.50 had not triggered. Okay, did not meet the criteria for entry, so was not entered. Now this particular trade setup, the prior one as we saw was in turbo mode. This one we're going to use in dynamic standard mode. All right, so I'm going to, again, this is enabled short only now in the top left-hand corner, and we're only going to be taking trades short within the context of a downtrend, but as prices rise, it's going to reach the criteria of where what we call a premium condition, and then you'll see it execute and then play out. So let's start the chart. Okay, and again, we're currently in an up move or in a corrective bounce. All right, many use that terminology. And then we're into the fair value zone here. We're at or near the top part of the fair value zone. So this is an excellent place to consider taking a short position, but we don't have a trigger yet. So what we don't want to do is we don't want to short them on the way up, but we want to short them once the pivot is put in place. All right, so let me just stop the simulation here. And as you can see here, we got the premium condition here at 1958.50. All right, in this particular example, with the automatic position sizing, notice $375. So this allows us to actually short 3 contracts instead of 2 in the prior example. All right, stop goes above the high, and it's staged order. So there's a staged order for 2 contracts here. Again, 50% it rounds up, and then there's a staged order to exit at or near target 1. All right, in this particular example, we got 1 tick better price than the suggested entry. Always nice, but doesn't always occur. We usually get the referenced price. So we're going to let this play out, all right, to the short side. And again, we're in the context of a downtrend. So at this point, again, notice we didn't short them on the way up. We shorted them once the pivot is in place, and then the sellers are coming back in dominant force. All right, so this should go down, reach target, well, actually reach the risk-free level first. All right, it'll exit 2 contracts out there. We'll see how long this takes. Okay, so right there, let me just quickly pause. All right, we bought back 2 contracts at 56 quarter. And then again, auto break even, all right? The remaining order comes down to the entry price. And now, again, mathematically cannot lose in this trade. Now we'll let the trade play out. All right, to conclude if it reaches target 1. Okay, so again, the context of a downtrend. Okay, and there it is. So this is how the auto trade assistant works. In the context of an uptrend or a downtrend, all what we have to do, the trader needs to do is enable it short only, so they know that they want to short the market here. They just are not sure exactly what price they're going to short. Okay, our CCI crossover premium and discount methodology identifies the proper spot from which to take the trade. Okay, so there's no guessing, there's no trying to figure out, well, how far will this pullback, this rise, this bounce go? All right, the computer figures that out. It reads the action. It determines that it's gone statistically far enough from which prices are beginning to turn around, and it will stage the orders automatically for us. And as you can see, well-defined, well-identified entry, stop, and risk-free and associated targets. All right, so this is our brand new PTG Auto Trade Assistant. Again, 4 Sierra charts, and this is available beginning October 1st, not only to our members, but to the prior members and trial members that have come through our organization in our room. And if you have any further interest in it, please stop back, give us another look, and see if this is a tool that may help your trading. Hope you've enjoyed the video, and we are excited to announce this here beginning October 1st, 2015. All right, and we'd like to wish everybody a very good trading career. Thanks, everybody, and we'll see you in the PTG trading room.